Welcome back to Investing Talk Podcast.
Today we're looking at ONDS Holdings.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. For you, the investor, the most critical lens, I think, for ONDS Holdings right now is, well, high risk, high reward. This company is really operating at an interesting intersection. Private wireless networks and autonomous systems. And the sources show they just made an extremely aggressive strategic bet designed to fuel massive expansion.
Okay, let's unpack that aggressive stance, starting with that huge financial maneuver. Over just the last 3 months, they've, well, completely repositioned their balance sheet. The first big headline that came in October, they closed an underwritten equity offering. Raised approximately, what was it, $425 million?
Yeah, that figure is staggering, especially when you think about the company's recent operational scale. But this wasn't free money, obviously. To get that kind of capital, they sold the equivalent of nearly 37 million common shares and warrants. That's, a significant dilution event for existing shareholders.
It is, and investors are naturally torn in that scenario, right? We got significant dilution today, but the flip side is the company gained immense financial flexibility. They basically traded short-term share price pressure for the ability to become potentially a major industry consolidator almost overnight.
That's really the core tension defining the stock right now. They bought themselves the capital, sure, but now they face, well, extreme pressure to deploy that cash hoard perfectly and quickly to prove the dilution was actually worth it.
And we saw them apply that pressure almost immediately. Just a month later, November 4th, they announced a pretty major strategic acquisition.
Right. They acquired Centrix. That's an Israel-based provider. They specialize in advanced counter-UAS, so counter-drone technology.
Okay, what's the strategic moat here? This isn't just about adding headcount or, buying market share, is it?
No, it's more about building an integrated defense system. Centrix enhances their ONDS autonomous systems portfolio. It slots right in alongside their existing assets like American Robotics and Aerobotics. So they aren't just selling drones for, say, inspection anymore. They're aiming to sell secure, managed airspace solutions, which is a really crucial distinction if you want to secure those large, sticky contracts in industrial and defense applications.
That makes sense. Okay, let's pivot to the fundamentals a bit, because the scale of that $425 million raise, it contrasts pretty sharply with their TTM revenue.
Yeah.
Just $16.13 million. Raising that much money on that level of income, it's sort of like buying a massive factory when you only have enough contracts to cover a small workshop.
Yeah, that comparison really highlights the aggressive growth posture. It really does. And the cost of that ambition is clear if you look at their bottom line. Their net income is highly negative, around minus $49.55 million. And operating income is also negative, about minus $36.74 million.
Okay, this raises an important point for, for someone learning about this.
Yeah.
We often hear that high-growth tech companies should invest heavily. But is there a point where investors should worry? Worry that this heavy investment isn't translating fast enough into, scalable, sustainable revenue?
Well, the company's argument, of course, is that this negative income is purely the cost of future dominance. That capital is being dumped into R&D, market penetration, and crucially, those strategic acquisitions we mentioned. They're clearly prioritizing future high-margin contracts over current profitability, banking on their unique competitive advantages.
Let's clearly define those advantages then, because they seem to have two distinct but complementary pillars that justify this whole thing.
Precisely. So on the industrial connectivity side, you've got the FullMax SDR platform. This is their proprietary software-defined radio system for secure industrial-grade connectivity. Think critical infrastructure like railroads, utilities. Then on the autonomous side, they have the Optimus AI-powered drones. That handles the advanced automated drone services, inspections, surveillance, that kind of thing.
And they're just relentlessly widening that moat through acquisition, it seems. The sources show they've been reinforcing their capabilities.
Yeah.
Obviously, Centrix for the counter-UAS stuff, but also Insight Intelligence sensors and 4M defense previously.
Right, and that diversification is crucial. It's allowing them to expand across different end markets, logistics, infrastructure, and importantly, defense and security. Because, defense contracts, if they actually land them, are typically large, high value, and very sticky.
Okay, now let's talk balance sheet. Because negative free cash flow is only sustainable if you have, well, rock-solid financial stability. Despite the negative earnings, the company does hold a $2.03 billion market cap. And critically, as far as we can see, there is no significant debt reported.
Exactly. That lack of debt, especially combined with the recent $425 million cash injection, that's the buffer. It means they can now fully focus on execution and innovation without that constant worry of servicing liabilities hanging over them. That flexibility is inherently priced into the stock's current value, I'd argue.
Okay, so here's where we turn to the charts, the technical context. What are the indicators saying to, say, institutional investors?
Well, if you look at the price action, the stock maintains a pretty clear bullish trend. You see consistent higher lows. The current price is hovering around $5.81. But remember that incredibly wide 52-week range. It goes from just $6.57 all the way up to $11.07. Huge range.
That enormous volatility, though, it suggests the market hasn't fully made up its mind about the company's ultimate value, doesn't it? Why isn't that massive spread maybe a bigger concern for a potential short-term pullback?
Well, the technical indicators seem to suggest the dilution pain is largely priced in and absorbed. The relative strength index, the RSI, it's sitting around 39.57. And that's kind of a key number because it suggests healthy bullish momentum, but it's not approaching that overbought territory.
Yeah.
You know, where you might expect an immediate correction, there's still room for institutional buying, potentially.
And that optimism seems reflected in the analyst community, too. Consensus rating from 4 analysts is strong buy.
Yeah, and that sentiment translates directly into the price forecast. The 12-month consensus price target is $7.25. That represents pretty significant potential upside from where the stock currently trades, and the short-term bullish trading range outlook is set between $6 and $8.
Right. And you can't ignore the internal indicators either, can you? Insider buying trends, those signal strong internal belief in the company's future, which is always, a promising sign when you are investing in a high-growth narrative built on future contracts.
Which brings us nicely to the near-term focus catalysts. What could move the needle soon? The most imminent and I think most important event is the Q3 2025 earnings report and call, scheduled for November 13th. This is really the moment of truth where they have to translate these strategic moves into clear guidance.
Okay, so what are investors specifically listening for on that call? It's not just about the historical numbers, right?
No, definitely not. 3 main things, I'd say. 1, detailed updates on the Centrix integration. Is the technology transfer going smoothly? Is it working? 2, organic growth. How are the core drone and wireless segments performing on their own? And 3, and this is maybe the biggest one, specific guidance. How exactly do they plan to strategically deploy that $425 million? They must provide a clear path for generating returns from that dilution.
Right. And beyond earnings, there are some sort of calendar-driven events that could move the stock too. We should probably note the potential ETF index rebalancing around December 20th. And also the institutional 13F holdings disclosure. That's set for early January 2026.
Yeah, those events can definitely drive significant volatility in inflows, especially if the stock becomes eligible for new ETF inclusion, or if major institutions report they've substantially increased their positions. That sends a strong signal of confidence to the wider market.
So this raises an interesting question. What speculative opportunities, maybe rumors, are bubbling up? Things that could trigger a big short-term move and maybe validate these acquisitions?
There are a few high-potential rumors floating around. First, there's speculation about a substantial government or defense sector contract win, especially leveraging that newly acquired Centrix counter-UAS tech. Landing a big anchor defense client would immediately validate that acquisition strategy.
And the regulatory side must be critical, too, for unlocking true scale in the autonomous drone space.
Oh, absolutely. Rumors are circulating about possible new regulatory clearances, specifically for fully autonomous BVLOS that's beyond visual line-of-sight drone services, either in the US or the EU. That kind of breakthrough would unlock enormous commercial scale that's currently restricted by regulators.
And finally, there's always partnership chatter, right? Stuff that could lend institutional credibility.
Yeah. Market chatter hints at a potential high-visibility strategic partnership, maybe with a large aerospace OEM or a major defense prime contractor. That would lend instant credibility and guaranteed market access they, frankly, lack on their own right now.
So what does this all mean for you, the listener? The story of ONDS Holdings, it really boils down to this. They've secured enough capital to potentially redefine their market. They seem to have a clear technological edge. But, and it's a big but, if they fail to land these anchor defense and industrial contracts, and do it soon, that $425 million starts looking less like a long-term strategic advantage and more like a short-term runway. It is a massive bet on flawless, high-stakes execution. And that Q3 earnings call coming up, that's the first real accountability moment on that journey.